Morning, ladies and gents. My name is Simon Brown on our Fund Fridays, looking at today resource ETFs, ETNs. As always, you got questions, drop them in the Q&A box. I'll take them as we go along. We're also on YouTube streaming. If you're watching live, I can pick those questions up as well, I think. Try that there. So resource ones, I mean, I'm going to show you, let's quickly go to a chart. No, I didn't want to do that. I wanted to do that. This is what everyone wants to have an ETF right now. And this quite simply is the J150 index, otherwise known as the gold miners index. And after literally, 2 decades of broadly going in a fairly large but sideways channel, it has finally broken out earlier this year. This is a monthly chart, so that would have been the breakout month, which was April, May, June, July. Yep, that makes sense. So April, things started getting all heated up here, and everyone's coming in saying, how do we buy the J150? The bad news is you can't. There is no ETF on the J150. What you could do is go and buy a collection, a basket of the gold miners and essentially try and replicate. And you could do that. I mean, you absolutely can. We can go and find which stocks, not so much the weightings. Weightings are harder to find. And then I've lost my mouse, as happens occasionally. I'll show you where you can go and find which stocks sit in the index, so you could, in a sense, replicate it. Weightings are a little harder to find. How I find weightings in a particular stock is I go and check the ETFs. And that's where I'm finding it. So in this case, I'm not sure what the plan is. So right down at the bottom down there, gold index, GODX is its code. And you click there. So it's Anglo Gold, Ashanti, DRD, Goldfields, Harmony, and Pan Af. There are only 5 of them. Undoubtedly, Anglo Gold would be the big one in it. You could weight it yourself. In essence, I'm saying you can create your own ETF. But it isn't a perfect scenario for a bunch of reasons. Partly because you can't put it in a tax-free account, and you've got to manage the weightings and all of that sort of thing. So the J150, which is what everyone's looking for, not there. We've got the top 40. We've got the Resi 10 as ETFs issued over those two. Let's go have a look at them. There's the top 40. I've pulled the Satrix one. They're all going to be the same. Certainly your second biggest holding is BHP Billiton, Anglo American, Anglo Gold Ashanti coming down at number 7, but at a very, very modest 2.7%. So even if we look for resources, and in this case they've called it basic materials, you're about 30%. In other words, you're only just... Frankly, that's what almost Naspers in process is 26%. So your top 40 does give you some exposure, but it's mostly Anglo and Billiton. Neither of them have gold, although of course they do have commodities and other resource stocks. Thermal coal, a lot of iron ore, PGMs in the case of Anglo American. Question coming through, doesn't Anglo American own Anglo Gold Ashanti? No, they used to. They got off with that some time ago. So you top 40, yes, but really, if you're looking for resource/commodity exposure, top 40 is not really your beast. Your other option is the Resi 10. Now, this used to be a Resi, it was a Resi 20. And then there just weren't enough stock, so it took it down to a Resi 10. And this is now a capped index, because otherwise BHP just becomes too significant in the index. Again, you've now got Anglo Gold Ashanti at 9 and a bit, Goldfields at 5, down there is Sabanya's bits of platinum, bits of gold. But what this is, and those are the 10 stocks. There are no other shares. The top 10 is the 10. What you've got here in this example, you've got commodities, but your gold is 9, call that 15%. If you wanted to add Sabanya, which would, I think, be a little bit generous, you're up at 18.5%. You're getting some gold, but again, not giant, not to the level which folks who want in that J150 have been talking about. Of course, This does, all of these are applicable for your tax-free savings account, so there certainly is a benefit to that. Fred, I'll come to yours in a moment. AngloGold still listed in the JSE. They sold all their mines. Tobogo, they have other mines, just not South African mines. And they're bunches. I mean, Richmond doesn't sell many of their very expensive watches in South Africa. Even BHP Billiton. I think the only asset they've got left in South Africa is the Hillside Aluminium Smelter up in Richards Bay. You don't need to necessarily have your business in the country to be listed in the country. I'm trying to think if Old Mutual is still listed in London. I think it is, but they no longer, they've got some business there, but not to the level that it used to be. So, truthfully, scant offerings here when we're looking at the mining and looking particularly for gold. I mean, if you're looking for resources generally, the Res ETN is certainly your product. Let's go here. J210 is the Res ETN, and it certainly hasn't done what gold miners have done, although it's almost doubled off those lows of April. It just isn't yet back at those levels, which the lead up to the commodity boom, sort of 2005 through to 2008 before the collapse, and the collapse was real, but we still haven't sort of recovered those sort of levels. But a solid move here, and if we compare that to the J200, which is the top 40, the top 40s. It's recovered nicely, but it isn't looking like any of those miners at all. I mean, not even looking close to what the miners are looking like. So, as I say, it's there, but not massive. Why is Harmony excluded from the J150? And as Mark says, nope, it's not. It is there. It's just, we don't, if you think back, for the old timers in the market, we'll remember the 80s when gold had, it had actually peaked at the beginning of the 80s, but back in the 80s, the 70s to a degree as well, I suppose 60s and 50s, but I'm not that old. Our exchange was full of gold miners, and at points there were 40 or 50 of them. And what in essence, in those days, a gold mine would literally be a single shaft. Would be the Beatrix shaft or the Kloof or whatever it was. It's a single shaft. And they would mine that shaft, make a profit, pay it out, and then, walk away when it was done. So the theory being is that if you had, say, for example, 10 years life of mine, and you could pay a 12% dividend yield, over the 10 years you would get 120% in dividends, and everyone was happy with that. Then what the 90s saw was the consolidation phase. So now we are down to just 5. And none of the 5, they're all, even Pan-African, which is the sort of small gold miner on our market, they're multiple. Remember they took off, they started with Barberton. They took over Evander from I wanted to say Evander Holyfield. They took over the Evander mine from, was it Harmony? Yeah. Even though multiple shafts, and that's been one of the significant changes that we've seen in the last couple of years. Well, actually, no, last couple of decades. So what we do then have is commodity ETFs. We've got a couple on gold and a couple on PGMs. The gold is the ETF GLD, which is from One Invest, and then, of course, GLD, which everyone knows. Now, quick point on GLD. If you take the Rand exchange rate and you multiply it by the gold price, you're going to find that GLD is below that price. And the reason is that GLD has been trading for about 15 years now, and it has a fee of 0.3% per year. And that's the storage fee, right? They physically buy those Kruger Rands and they go pop them in a vault in what is now London. And what that then ends up with being is that they have slowly sort of the price has fallen below that perfect exchange. Because in essence, I don't know what the fee was back in the day, but let's assume it's been 0.3 for 15 years. You've lost 4.5% of the price over those 15 years in fees. So the price of the ETF will be about 4.5% below. And that'll happen with all of them. The ETF GLD is obviously newer. The KCC GLD, this is an interesting beast. I always truthfully forget about it. And let's go here to look at it. KCC GLD. So this is a Krugerrand custodial certificate issued by, is it RMB or FNB, broadly the same. Working this is essentially a Krugerrand, whereas the GLD ETF is 1/100th of an ounce, 1% of an ounce. This is a Krugerrand. And what they do, and you can see the market maker there at 150 on the buy and 150 on the sell. What they're essentially, and then you can see the chances all the way down there looking for mispricing. What they've done is they've gone off and said, cool, you buy this. They will physically go and buy a Krugerrand and store that in a vault for you. They charge, what are they charging? I can't remember what they're charging. There will be a TER here somewhere. There's going to be an expense ratio because obviously there are fees at the time, and I'm not seeing it. I think this might have been written ahead of its listing. They physically go and take your piece of your purchase, and they go and stick it in and they buy you a Krugerrand. Here's where it gets really interesting. This was issued in October 2014. And every 10 years it kind of rolls up. And what I mean by rolls up is that therefore in October 2024, again 2034 and again 2044, you can actually take physical delivery of your Krugerrand, which means you now have to store it. You're also going to have to somehow get it from RMB offices in Santon, I imagine, or wherever they will be. But you can actually take physical delivery of your Krugerrand and therefore get your piece of gold. GLD doesn't allow, they physically hold it, but they don't allow for physical delivery. You, of course, also have Krugerrands on the JSE, although I don't think that Standard Bank trades them. But what you note is that those are trading at actually a fairly chunky premium. So 32,000 to 33,900. The KCC GLD is a much fairer reflection of the actual price, and that's because Krugerrands trade free. This is an ETF. It's got a market maker. The Krugerrands just trade free. Let me see if I can trade a Krugerrand. I'm pretty sure not, because the problem with the Krugerrand, you can. Oh no, you can't. Okay, so you can't buy it on online share trading, because the problem is then you have to go and fetch it. And that starts to get messy. It's one thing if you're in Joburg, maybe you could, but like Standard Bank doesn't want Krugerrand floating around their office. I remember way back in the day, and it's not even that far back, in the early 2000s, I was visiting, I can't remember when it was now. Anyway, basically the Krugerrands, the delivery guys used to carry them down Anderson Street, off to the exchange, from one person to another, one broker to another. No one liked gold much back then. The price was falling, so no one was getting hit over the head for it. So the KCCC GLD is a nice option. It's exactly the same as GLD, except that it's a full Kruger rather than 1%. And you can, at some point, get a physical delivery of it, which might be an option for some people. The other, no, I don't want that one. Come on, Simon, click the right buttons here. The other ones is the PGMs, platinum golds. So we've got from One Invest, we've got palladium, platinum, and rhodium. And then from ABSA, we've got palladium and platinum. Now, again, these are ETFs, so they physically hold the underlying. There's storage costs. Although these are ETFs, they're not applicable within a tax-free account. You cannot put them into a tax-free account. So, Rob, no, if you open a tax-free account in OST, you can't buy shares. You can only buy ETFs. And you can't even buy all the ETFs because you can't buy these ETFs, although they're ETFs. And the logic is they're single commodity. Reserve Bank is scared that you pick up one and it collapses. The big winner here, they've all done incredibly well. Let's go have a look at ETF PLT, which is platinum. Yeah, not bad. Zoom out a bit. Broadly sideways, and that's part of it. The one moves and then the other comes back, etc. ETF PLD, which is palladium, has had a better run of it. Platinum's been stuck under $1,000 forever and a day. The only real thing you've got there is the rand movement. Palladium had spiked quite nicely. This is a monthly chart, and that spike there that we're seeing back here, sort of April, is more than palladium. That's actually just rand weakness. And then ETF rhodium. I know someone who actually bought this thing way back in the day. like down here somewhere where it was, I mean, what was it trading at? It was a couple of $100, deep, yeah. And then it sparked at what? The highest 2,300. I'm struggling with my zeros. Something crazy, 2,300. Rhodium, which is the least known and used of the PGMs. And there's some others lurking out there as well. Richard, within your tax-free account, you can buy and sell ETFs without it impacting your limit or your tax. You can transact 100 times a day in that account. There is still no tax applicable, and it doesn't impact your limit. Your limit is what you put in, and then if you draw out, the limit doesn't reset. So you got 500,000 limit lifetime. You put 30K in, your limit drops to 470,000 because you've put 30 in, so you've got 470,000 left. You can then trade up a storm. Go absolutely crazy. What you can't do is exceed the limit, but you can trade within there, no problem. If you take the money out, your limit stays at 470. In other words, it doesn't reset, but you can transact as frequently as you want, absolutely no problem. Rob, how do you know which ones? I'll show you now. So under instruments, you can go and click on TFIA enabled instruments. Those are the ETFs, etc., that you are able to buy. They're all ETFs, the ETFs that you are enabled within a tax-free account. And that's not unique to Standard Bank. Those are the ETFs that you can buy in any tax-free account with any broker. And then we get some commodity ETNs, exchange-traded notes. Let's step back a moment. What is an exchange-traded note? Remember, ETF, they physically hold the underlying. Exchange-traded note, what you've got here is you have a credit note, essentially, from an institution. That means two things. It means that they expire one day, and I'll come back to that in a second. It also means that you take counterparty risk. In other words, if that institution goes bankrupt, you join the queue. And there are a couple expiring next month: gold, platinum, palladium, and silver from One Invest. I'm ignoring those. We've got PGM, which is New Plat from ABSA. We've got a silver one lurking here, which is New Silver. So no silver ETF. And the reason's quite simple, is that, an ounce of silver is what, $20, and you sit it in your hand. An ounce of gold is $18,000, and it also sits in your hand. In other words, the silver, we'll put it the other way, the gold is 100 times more valuable. So with silver, your vault just becomes too expensive. If we take a direct translation from ABSA charging 0.3 on the gold ETF GLD, we would have to go to 30% total expense ratio, assuming costs were all the same, but because it's literally just 100% smaller. And then there's the couple of exotics from Standard Bank, exotic ETNs. We've got oil, which tracks West Texas Intermediate. There's a copper, which tracks copper, of course. There's wheat, and then there's corn. And these are also expiring, but Standard Bank will roll them. And what I mean by rolling them is at expiry, they will issue new ones coming out. Again, ETNs and single commodities, those can't go into a tax-free account. But what is important with them is make sure you understand the T's and C's. So if you go to the website warrants.co.za, you will find the document Commodity Linker ETN Fact Sheet, updated on a monthly basis. And here it is. And what it does is it tells you about these different products. Now, as I said, I've ignored those four there, the gold, palladium, platinum, and silver. They are expiring on the 10th of August. That happens to be a public holiday. If you currently hold that, you will get paid at a cash out at fair value. Obviously, there's process and T+3 on the JSE, so it'll take a couple of days, but you will get your cash paid out. If you're holding them and want to roll into an ETF, contact the folks at One Invest. They will help you with that process. But then there's a bunch here that are expiring only next year, and that's the corn, wheat, copper, West Texas Intermediate oil. West Texas, not Brent. Very important. Now, issue date is nice. Expiry date is in 10 years after that. It's important. For example, copper, we're looking at the pound price, not the ton price. West Texas, we're looking at barrels. But here's the thing. Exposure at launch. In other words, there were 50 barrels in one of those ETNs. 2.5 pounds of copper, 5 bushels wheat, 5 bushels corn. But because of the process of rolling, because they use futures contracts, that exposure changes. So the corn and wheat has gone from 5 to 8.3 and 10.9. The copper has gone from 2.5 to 2.75, and the West Texas has gone from 50 to 92. Those will change. They also tell you what contract you're looking at. So if you're on a website and you're looking at, for example, the price of West Texas, and you multiply by the rand and you multiply 1 into 92.17, and you say, no, but this price doesn't make sense. Well, yeah, because they're doing the September contract, and you will be, where are we at this point? 17th of July, you're probably looking at the July delivery contract. So they're going to have different contracts that they are currently sitting in, and they tell you when their next rolling date is going to be happening. This is important, particularly if you're looking for the pricing. Now, there is always a market maker there. So if we go to SPA oil, we don't want to look at it there. I want to look at it there with my bids and offers. SPA oil. You can see Standard Bank on the buy side at 150,000 units for 728, and they're there on the sell side for 746 for 150,000 units as well. Someone just said, hang on, how do you know that that's Standard Bank? Head to our YouTube channel. I did a whole spot the market warrants.co.za. How many dups do I need? Warrants.co.za. I'll send that to all. So you can see the market maker sitting there, and some volume going through. 212,000 today. Certainly, there's been some fairly big volume days. Those giant green days there, but then also post that. Now, this is obviously when oil went negative. The ETN didn't go negative. Why? Well, because they were actually not looking at the contract which went negative. It came under some pressure, but it didn't go negative. SBCRN. Hey, why did that SBCR? What are the codes? Have I got the codes wrong? Oh, my bad. They're all SBA. Sorry, so my slide is actually got incorrect there. SBA CRN. SBA CRN. So there is corn. You can see Standard Bank there. You can see it moving around. SBA WHT, which will be wheat. I mean, these are fun, but these are not anything that I've ever looked at. Commodities. My issue with commodities, particularly these sort of softs and the like, is that ultimately they are cyclical. And what I mean by that, and we should have some 10 years of data here if we go back. Yeah. As soon as price booms, as farmers just, this is copper, so you just mine more. In the case of wheat or corn, as soon as price booms, well, the farmers just produce a whole lot more, and therefore your price comes back. Although we've seen some pressure on the corn, that is actually surprising to see. And then SBA WHT. And there's the wheat one. And ignore that spike up to $19. Pretty much it's peaked at 13, trading at 11, being as low as 5. There's something there. I know some people absolutely love these and get deeply excited about them. For me, yeah, they're interesting, but they don't blow my socks back. Leod, tax-free accounts have been asked several times to clarify that the 500,000 contribution does not include any growth. It's only money into the account. You are 100% correct. So 36,000 a year as of March of this year. Still Finance Minister Mboweni upped it to 36,000 a year, and then 500,000 lifetime. And that is not growth. That is only the new money coming in. You are totally correct. The growth is over and above. They only matter, and the only thing they're tracking is the deposits going into the account. So, what's in it, as long the institutions make sure that the right products are being accessed in the account, and they report to SARS in terms of the money going into the account. Fred, you were asking securities lending utility ratio shown on the fact sheets. What they do, and I know there it is there. So Satrix, in the case here, they hold all these shares, right? Because it's an ETF, so they physically hold the shares. But they take the view that, like the shares are there, but they don't do anything with them. And yes, they're creating and removing units. What they essentially do is they loan out these shares for people who want to take short positions. And you'll see, and I'm going to bet that the Resi will have a much lower rate, even lower, but not that much lower. So what they do is they loan these shares out to third parties who then can short it. Because remember, when you're shorting, you need to physically have the script to sell into the market. You buy it back at a lower price. So they lend the shares to individuals, institutions, etc. Lots of legal contracts, so don't worry, you'll get your shares back. And they charge a small fee. And that is then offset against the cost of running the fund. I remember back in the day, early days of Satrix, they actually had a positive total expense ratio, or negative, whatever. They paid you, because the fund was still relatively small back then, and they lent out script, and they made so much money from the lending of script that it covered their costs of running the fund. Now, the ETF issuers do this. The large unit trust guys will do it. Anyone who's sitting in a large pile of stock, which is essentially not directly being used, will be doing that. So the commodity ETNs are lacquer, but again, also not allowed in tax-free accounts. Folks, we will park it there. If you've got another quick question or two, you can drop it in. We can take some questions. Remember, Mondays, Wednesdays, Fridays, 10:30 each day, except public holidays. Market Standard with myself and Danae on Mondays. Wednesdays, Know Your Platform. Fridays, we're going to be shifting in August to Fun Tech. We'll be changing this up a bit. And next Wednesday, I think I'm going to do commodity and or currency futures on the online share trading platform. As always, legal things, we'll park that there. Fred, absolute pleasure. One of the things, and Susan, is what you're saying now. You're saying, yeah, you love knowing about this, but you might not buy into it. No, 100%. I agree with you 100%. There's all of those commodity ETNs. I've never owned any of them, but I look at them from time to time. I know they exist. I love that I know, but it doesn't mean I have to buy them. Absolutely not. No, don't plan to do that at all. Craig, absolute pleasure. EJ, as always, thank you. My pleasure. Ladies and gents, we will park that there. Everyone have a great Friday, a great weekend. Stay safe, wash your hands, and wear a mask. Cheers all.